Gold has had a phenomenal year so far, hitting one record after another, and the last 3 months have been especially energetic for the precious metal, which has gained on the back of Fed rate cuts and geopolitical tensions. But what does the last quarter of the year have in store for gold? This is a special report. Thanks for joining us at XM.com. I'm Cristina Marujos, and with me today is our investment analyst, Cristina Parthenidu. So, Cristina, it looks like the rate cut story might be a catalyst for gold. The latest U.S. Employment data almost wiped out the possibilities of another 50 basis points rate cut by the Fed in November. So what could that mean for bullion?
Hi, Christina, and thank you for having me. Well, definitely rate cut projections could be a key source of volatility for gold during the fourth quarter. And basically, investors have been doubting the case of a 50 basis point rate cut until the last minute before the Fed finally delivered it in September. And that uncertainty had been supporting gold during the third quarter. The case now is that the latest jobs report was strong enough to suggest that the U.S. economy is probably performing better than we expected. So, and perhaps it doesn't need any further aggressive rate cuts or even a single rate cut in November at all. So the rate cut outlook is not very clear at the moment because there are still some sectors of the economy, such as the manufacturing sector, which are still struggling. Moreover, the delinquency rate of credit cards and mortgage loans is rising, and we can't totally ignore the inverted yield curve between 3-month and 10-year bonds, which is not always a reliable indicator, but it's typically correct in predicting recessions. So overall, the U.S. economy is still facing some challenges, and we shouldn't forget that the unemployment rate is a lagging indicator, which means that it's basically tell us what has already happened, and it cannot predict what will happen. Okay, I mean, definitely upcoming data will be closely watched. We need more information before we become more confident that the U.S. economy still is basically resilient. And if that proves to be the case and the data keeps surprising to the upside, including today's inflation report, then that could put a barrier on gold's rally. Otherwise, if the U.S. economy starts to show some cracks, boosting hopes for additional rate cuts, then that could be positive for the precious metal.
Of course, it's not just economic data that could drive gold prices. We also have geopolitics. Geopolitical tensions in the Middle East are driving safe haven flows to the precious metal. Now, Israel has been clear that a retaliation against Iran is to be expected. So could that offer further tailwinds for gold in quarter four?
Undoubtedly, the geopolitical factor is another tailwind for gold. The war in Gaza has turned into a regional conflict in the Middle East. Iran is now more directly involved in the war, and that's quite risky for the global economy. It might be risky even for Israel to hit energy facilities in Iran without the help from its Western allies, such as the U.S. So perhaps this might be a topic after the U.S. election, although Israel has promised that its next retaliation will be precise and unexpected. But definitely any retaliation could bring anger to Iran and threaten, and if that threatens its government and its nuclear facilities, then that could significantly boost the risk of sentiment, lifting gold to fresh highs.
And Cristina, before I let you go, we also have to look into politics because the U.S. presidential election is just weeks away. How could the new resident of the White House, be it Donald Trump or Kamala Harris, prove beneficial for gold?
Probably the U.S. election could be a game changer, perhaps more on the geopolitical front and the trade front. Investors don't have a clear picture of who will be the next president. Polls are currently showing Kamala being on the front with a small margin, but this could be easily reversed. The thing here is that Trump might be more positive for gold because of his aggressive stance against China. His communication was kind of unpredictable during his first term, so perhaps this uncertainty may persist and could keep gold supported. On the other hand, he promised significant corporate tax cuts, which could be considered inflationary. So, if the U.S. economy indeed remains resilient, his corporate policies might cause some pressure on gold. Now about Kamala. If Kamala wins, she's less familiar with foreign affairs, so she may not be much different than Biden as regards restrictions against China. She definitely wants the U.S. to maintain its leadership in the tech industry, so she may keep pressure on China, but overall she may use a more predictable communication, which could provide little support to gold. So let's see what the results will be next month.
Christina, it was great having you with me today. This was a special report on gold here at XM.com.